The year you started, of course, was the NASDAQ crash.
Yep.
Was this a problem? Was it okay? Was it opportunity?
It was awesome. I mean, because if there's volatility, on volatility, if you're running a hedge fund, you got to like volatility. I mean, volatility is your friend because your opinion matters. And so particularly in something like the NASDAQ correction was really about business models. And there were viable business models, not viable business models, which ended up being a lot of revenue-driven models, and then misrepresented business models. So you look at something like cellular, that really had been built out during the 90s as a duopoly. There began to be a third entrant that was financed in the credit markets. That turned out to be a viable model. Wireless cable, which turned out to not be a viable model, was kind of, if you ever tried it or looked at it, it just didn't seem viable, and it wasn't. And then there were the misrepresented models, which is the polite way to say a fraud. And something like an Enron, the issue was, can you find a needle in a haystack, a special business in this fraud? So in the case of Enron, they had some regulated businesses like pipelines, and those ended up being wonderful investments. And if you appreciate it, they weren't able to mess with those operations, and that was helping them, and what they were claiming, helping them leverage and be in other areas. That part of the business turned out to be very stable.